let me put it in two ways. I think the banking sector in Nigeria is actually very sophisticated, and we have done well compared to, especially on the retail side, compared to other parts of the world, Africa, and definitely on other parts of the world. I don't think we sell our story well. And so one of the reasons why, for example, mobile money hasn't succeeded in Nigeria is because we had a very good NIBS provided a platform that allowed, immediate value for people who wanted to transfer money. My wish list would be that we need more collaboration and coordination in the ecosystem with all the stakeholders to fortify the system from a trust perspective, from a alignment. Today, technology has completely changed the way banking has done, but we have legislation and regulation that predates that, and so we haven't fully taken advantage of what technology can do, because if we don't enable that infrastructure, you won't get that digital penetration, you won't get that leverage of the investment that we have made. And so and that is why I think people think that Nairobi and Kenya is the bedrock of fintech. It is not. It is actually Nigeria. It's just that we have invested more, we have gotten more investment, but we haven't scaled it from a product perspective. We haven't scaled it from a penetration perspective. And if we do that, you can see the impact. You only have to look at companies that have done that. MTN, you can see the impact that they have made. So it is, and when they made that investment initially, people just thought, well, that's a huge amount of money, but now look at the revenues. And that's because once you can provide a service, and that's what technology does, once you can provide a service at a point that people can pay for, they understand, and they can use, and they need, you'll see success. And I think that's what we need to do, but we need to look at the building blocks, especially when you look at the context. 100 million people are below the poverty line. Forget you have 200 million people. So you have 200 million people. So financial inclusion is not the first challenge. The first one is identity. Know your people. The second one is social inclusion. And the third one is financial inclusion will come. And what I mean by identity, everybody has to have an identity. It has to be digital identity. And we can just borrow from what India is doing. I believe that the Minister of Digital Economy is looking at, what the digital public infrastructure to help us drive that or lead that. But our problems are different, so we have to look at the technology and customize it to our place. Once you've done that, it's like, how do we, and that identity is social inclusion, how do you include people into society? I believe instead of roads, there are two types of roads now. There's physical roads, but we have to start building digital roads. And what I mean by digital roads, the internet, availability, but also devices that people can afford, even at the lowest level, because once you have identity, you have a device, I don't care what it is, and that means if you're poor, I can now directly provide you your social benefits as a government, and knowing that there won't be any ghost, I'm giving them directly to the person, and then now there's a reason to be socially included. I want to be socially included so that I can get my benefit. I want to be socially included so that I can vote, right? I can change government, right? And then from there comes financial inclusion, right? So that's where we need to get to. But we need private sector, public sector, regulators, all working together to provide that. So we're a long way from that. But all the ingredients are there. So all the ingredients are there. So we need that, and so we need the right type of leader that understands the problem, understands what technology can do. And it doesn't have to be in one person, it has to be across a few people. So I think trust is confusion. Trust is not knowing. Trust is uncertainty. So one, of course, because of just basic transactions. Today, if you go to a bank, cash is cash, I pay you cash, it's there, right? I want to pay you electronically, the network is down, for example. So you're not sure. Network, in fact, the network is down, so you don't get value, so you have to wait. And so that's uncertainty, right? Those things affect trust. The second one is, even like if I'm moving money from Sparkle to another bank or to another bank, it goes from Sparkle to NIBS to the other bank. You never know. So like if there's a breakdown, if the money hasn't arrived, is it from Sparkle's end, is it from NIBS end, is it from the other bank end? There's uncertainty there. Then of course there's a good old big elephant in the room, fraud. Heavy, massive fraud going everywhere, cyber fraud. And of course,
And that is costing banks some money too.
yeah, it's costing everybody. But everyone thinks that that cyber is not safe, and digital is not safe. But really, what has happened is that everybody has moved to the cloud, including criminals. Right? Everybody has moved their business to the cloud. You don't hear nobody goes. No criminal goes. You don't hear that armed robbers went and attacked a bank. There's no money in the bank, so everybody has moved there. So the question is, what are we doing to? And then of course the fourth one is education. This is what I've been doing my banking this way. You want me to move this, but who's going to help me? Who's going to show me, right? In what language, right? So if you say you want to take it down to the masses, at what languages are you using to do that? Who are the advocates that are actually helping, hand-holding people to actually achieve that? So, and then, like I said, if I ask you, Sparkle, Pampi, OP, who's who? What is the license? I'm an MFB. What is OP? What is? Banking is changing, right? Or should I say, people are beginning to do certain things that banks do. So everybody can do a transaction. Even supermarkets in the UK were getting banking licenses, but now they're now giving it back because banking is about. So the difference between banking and anything else is it's a store of value. It is where you keep your money for safety because we have gotten a license that says that you are safe to, right? Other people have licenses to do transactions, to send money from point A to point B. But if the money gets lost, then there's a problem. Now, storing people's money is an art, right? Lending and managing risk, those are banking capabilities that you must understand. Other organizations, that's why we always say we're not a fintech. Other fintechs know technology very well, but do not know banking very well. Because also banking is interest income and fee income. That's the only way you're going to make money, right? And how you're going to make money on this depends on your products, depends on your customers and what you're offering them. And so when you look at all that, right, a lot of people are doing transactions, they're moving money from point A to point B, but in terms of how do they save, where do they borrow, and there are people who are lending as well and lending at corporate price, which does not even encourage, proper education. So those four things, right, create one because you trust what you know. Like I said earlier, when there's confusion, there's lack of trust. When there's uncertainty, you don't know what's going to happen, there's lack of trust. When you don't understand, there's lack of trust. And when, of course, you're uncertain about who the players are and you don't know, there's trust. So for Sparkle, what are we trying to do? So we're trying to create an ecosystem, a safe haven, right? And one, by making sure that the people, our customers, all right, are who they say they are. So we take KYC. So from the beginning, when we started, if you didn't have a BVN, so we couldn't bank you. And then when NIN was mandated, now you have NIN. We're even going to a third extent of, like I said earlier, there's governance, there's regulation, and there's self-regulation. If you believe that the minimum regulation is not enough for you, then you go to a third one. And so for us, we're also investing in more technology to just check even the identity, because of especially now where you see deep fakes and the people are using technology to do crime. You also have to use technology to fortify your environment beyond that. That's how people are doing. So like if people I trust my goods. In the end, banks are about keeping people's money safe. And if my money is safe and if transactions go from point, I'm certain that this is what happens. That's how we want to build trust. The third part is us now working with other players in the market, working with the industry. And I think, I'm the only person that has run a top 5 commercial bank, traditional bank, and is also now running a digital bank. Nobody. So I understand traditional banks. I understand the digital environment better than anybody, any traditional banker, any traditional CEO. So I think one of our roles in Sparkle is also to advocate, right, of making sure that because even though we are competing for share of wallet and share of transaction, we have to collaborate and coordinate so that the competitive environment, right, is conducive, or else we all lose. I always look at things in context. Government, the regulator, like I said, has come out with a few policies to also facilitate and drive it. So KYC, I mean, they came out with KYC. They came out with regulation earlier back to reduce the cost of onboarding customers. Of course, now they've actually now said, okay, because of the spate of crime, minimum, so KYC level 1 must have BVN, which is a good thing, right? Good thing. Secondly, they came out with open banking, they came out with sandboxes to encourage fintechs to test their solutions in a live environment. And so and they came out with of course, the e-Naira as well. So it's done quite a few things, even working with NIBS as well. Don't forget the banks work with NIBS. NIBS has also come out in collaboration with all the players, come out with what you call again, QR pay, contactless payment. Because for me, if anybody, when somebody tells me that they're digital, my yardstick for digital is paperless, cashless, and contactless. Right? So like if somebody tells me they're digital, or a bank tells me they're digital, I must be like so. But like I said earlier, all these things are not, you cannot do them in silos. They have to coordinate with other parts of, other arms of government. They have to coordinate with all the stakeholders, the private sector. And so we have come up with so we have nice raw materials to cook a good soup, but we have a few chefs, but we're not coordinating, right? We're not coordinating to now make a great impact. And that's why we haven't scaled. We have invested a lot of resources, but haven't scaled. So even things like security, even the people that because in the end, if we're going to leverage technology, like you need people who understand the Nigerian market, because our story is different. So we're going to design for Nigerians. But so even things like security is important in ensuring that your investment that we have made, right, to get people into the digital economy is not wasted, or is not costing us too much. But right now it is costing us too much as well, because the dollar is going up. Some of our expenses are in dollars. So today, if my cost can go up by 20% without doing anything. It will affect us from the third-party partnerships that provide us services like cloud services. Cloud services are based in dollars, so they affect us. But that for us, that is a small. I would like to say a small portion of our total cost. But of course, if Naira goes up by 100%, so what is 5% now comes to 10%, right? So if 5% of my cost is dollar, but I'm using Naira, and then it doubles, it goes up by 100%, that 5% might go up to 10%, so that might double. But for us, I think in Sparkle, I mean, like, knowing that our income is going to be in Naira, our income is going to be in Naira, we're very, very deliberate about who our partners are. And when we have no choice, we pay dollar, but where we have choice, so most of our staff, 100% of our staff are Naira based, and we pay for everything in Naira. But of course, things that are laptops, like if laptops are imported, so those are going to go up in price as the Naira devalues. But when I think we only have 40 people that work in Sparkle, so and so those are just minimal costs. So we'll be because we use technology for everything. I mean, so I would rather, and when you look at it, it's like we use ChatGPT, and so like ChatGPT is like an assistant. So instead of hiring one more person, you give somebody a subscription for ChatGPT, and that does more work, right, than somebody else. So like it's just using technology intelligently and taking, and knowing where what to invest in and what not to invest in, and looking at the total game. I think just industry is maturing from because when I started banking, we had like 200 financial institutions in bank system. 1991, New Generation Bank, Guarantee Trust, Zenith, Diamond Bank then, and you had all kinds of other players, and of course, then money was just being pumped into that space because that was the new gold rush, right? After a couple of years, people start asking. So the standards that people were looking at, how many customers, how many branches do you have? Then question, okay, bros, how far now? Where is the money?
Yeah.
How much are you spending? People metrics change, right? And then you just see consolidation, and you just see people going out of business, and you see crashes everywhere. There was a lot of liquidity because coming out of COVID as well, right? So there was a lot of liquidity, government printing money, especially in America, and so there was more. And then, of course, these are money looking for yields and opportunities.
Yeah.
And of course, so it was what's the value proposition? What do you want to do, right? 200 million. No, the metric is 200 million Nigerians, and people are also looking at things like the Amazon model, where they will tell you that they haven't made money profit. They're not going to make much profit in the next 5 years, but they have XYZ thousands of customers. So people are looking at the wrong metric. So you're looking at the metrics of number of customers, number of transactions, which, of course, is part of the problem that we have. Because if you know that funding is going to depend on your acquisition and the number of transactions, standards are going to drop. And when standards drops, you're now inviting a lot of sleeper opportunities for fraud when it comes. When it comes, and then you see a lot of spending. People are spending a lot of money, and like I said earlier, banking or financial services, very, very simple. If you go to very simple, interest income, how much are you charging? So you see a lot of people spending money on marketing, advertising, giving to your market, you're acquiring customers and you're giving them heavy discounts. And then of course you're building, you also have a high staff strength. Question is, where's the path to profitability? And for you, it's like it's going to come eventually, but as long as this customer base is growing, we're going to get funding until it dries up. Then wahala starts. I would say that if you have a purpose, when you say purpose, so like in the end, okay, fintech. You're fintech. What are you doing? What are you doing? So good stories, good business solutions will always find money. It just before, whether we just say open your business, I'm a fintech, you will find money, right? Whether you're going to succeed or not, that will just spread betting. But today, it's just like today, if you want to start a bank today, they will ask you questions. Like before you even find investors. The investor will tell you, what are you doing that XY top tier 1 bank is not doing, or tier 2 bank is not doing, or this digital bank is not doing, or this fintech, or this pay. That's what people are going to ask. It's going to be difficult. Like your journey is like, good stories don't drop on your lap. You have to go and find those good stories. So you, as fintech, have to go and find or be found, right? So they're gonna have to do things differently. You have to tell a different story. And just like for us, I mean, like we're raising money now. My story is not about how many customers I have. My story is about the platform that I'm building, right? I'm building a platform that is going to compete with traditional banks. That is going to give full banking services, not just move money. I'm not doing transactions, right? I'm doing full suite of banking services, and so we're going to put more capital in the organization. We're going to have state-of-the-art automation. We're investing in artificial intelligence because that is the future for better customer experience, fraud, and everything. So there are different stories. It's not that I'm going to get 20,000 customers, 2 million customers tomorrow. I'm going to get 2 million customers, but when I get those 2 million customers, they're going to be very profitable. So I'm using good old traditional metrics that people want to see. And that's it. And so it might take longer, it might be boring, but the right people, and we will find the right people with who want the right story. Of course, and that is partly, the more transparent you are, there's more trust, there's more betting. Most of these banks, Nigeria, are publicly quoted, practically. And so they have a responsibility to do so. It's competition, but so like for us, we are just finalizing our fourth quarter numbers for our customers. People don't see that these reports also are two-way. You're giving information, And so like you're also like using it as an opportunity to ask for support as well from people as well. And that's the way that we see that. So I tell you what is going on, you invested your money, and then I say these are the things that we're looking at. Because one of the reasons why we actually, so like we're very deliberate about who invested in Sparkle, especially in our third round. We wanted people who were Nigerians and who had, should I say, who were influential in Nigerian space. Because sometimes, it's not just money that helps you, but it's the access to network, access to market, access to support that makes the difference between VC's money and a Nigerian's money that knows the industry. I don't think so. I mean, nothing came out there that would surprise anybody that didn't know, right? But now that it's out, right, there's transparency, so it's like we're reset. So it now gives this new administration, especially the ones who are the helms of affairs of SEBREN, an opportunity. Because Nigeria is still a great opportunity, and Nigeria will always get help. But how much help? So it's like if somebody wants to borrow money from a bank, and it doesn't tell you, and some people will hide certain bits of information. They're actually doing themselves harm, because sometimes lending you too much will cause problems in the end. Lending you too little will also cause problems. But once I know your situation, then my job is to help you. And that's what Nigeria has done. And that's what they said, okay, well, by the way, this is the situation. It sucks. Very good. Now I know, right? So I know how much support or I can give you or not give you. And that's probably one of the problems that happened. I'm talking about VCs, yes, yeah. You saw a lot of fintech that you say a lot of fintech that raise money, but they raise that money. Some of this money was not for 1 year or 2 years; it was for 3, 4. But if you blew it in 1 year, right? So it's a different. It's running into problem, because I know how much we've blown. I won't say blown. We've actually invested judiciously over a 4-year period, right? That has been some people's OPEX in 1 year, and I'm thinking, please, what are you doing? Because apart from the heavy marketing spend, what is your solution? What does the solution have that mine does not have? I mean, it's too early to tell. But I think that was a good move as well, because you're only as strong as your weakest link. That's what I'll say to that. So, I think if you're going to be connected to a system, the network, right, where money is moving, customers' deposit move from point A to point B, they should be beyond just getting your license. You must have had certain certifications, because you have all kinds of players. You have tier 1, tier 2, this different types of institutions. So there can be diversity, but let there be a common standard, minimum standard of operation. First of all, we're building a platform in 2019, and so building a platform, getting the licenses, employing people, and then we're about to launch 2020. I believe first quarter 2020. Of course, COVID was looking around, and people were wearing masks, and then lockdown. But Sparkle was built on the cloud. We're born in the cloud, and so everything is cloud-based. And so our biggest concern was people. Where our people were making sure, first of all, but they were not working in the office anymore. They were working in their houses. So, like, one, making sure they were healthy. Secondly, making sure they had remote working capabilities. We already work with laptops, so that was not the problem. But making sure that they had internet access, to getting them devices that could work. That was the biggest challenge, and making sure that they were okay. And then work, in fact, I mean, like, because when you have nothing to do, when you're in lockdown, what do? You work very fast. You work, I mean, everybody's working, everybody's collaborating, so we're having meetings at different times of the day. So it was actually quite fun. We didn't have any customers there, so there was no we were building still, and what happened, we didn't get a lot of customers then, but what we did were, we didn't get as many customers as we wanted to, but what we got, and what COVID lockdown did was, it created already more awareness that there already was. Then but awareness, my father knows that. My father has always known about mobile banking and digital banking, but he still has his checkbook. But now with lockdown, that was not available. So, like, people now had to use mobile options. People had to use Zoom for meeting people. So what you got was from awareness to appreciation of technology, how technology can change and reduce costs, can make you to be more productive. Then adoption became higher. So for us, that whole process, first of all, allowed us to focus, in fact, reduce our marketing spend in terms of educating people about, about the benefits, and then adoption was easier to sell because people could adopt quite easier. So that's like the actual experience. And then you had then we even had the when we had that restive period. What's it called again? I can't remember. NSAS as well. Of course, people were donating, and people were donating electronically because the traditional banks were not. Should I say? Were independent, and so you had of course, because most of your customers as well, your customers are Gen Z and millennials, and those generation of people beyond banking with you or doing transactions with you. I won't call it do transactions. The transaction and the banking, they're two different things. I'm sure we'll come to that. They also want to know what your purpose is. They want to be aligned to. They connect to platforms that have a purpose. So what is your purpose? If you don't have a purpose, if your purpose is just to be profitable, and you don't care about society or the environment or ESGs, then sometimes that will take them to somebody else. So it's not about profitability. So I mean, it was a very interesting period, but I mean, I think we're 5 years this year. I can't even believe we're there. And when I think of the people that we started with or we entered with, a lot of them have gone. A lot of them are going to go. But I think we're building something that is like I like to say, we are building a skyscraper. And when you're building a skyscraper, you build down first. So we're building that foundation before we start, going up.